This is the Homebuyer Learning Center. We are a bank through Contour Mortgage, and we're going to start the seminar on how to buy your home, all the steps to take, and get prepared to just finally pull the trigger and do it. So I'm Jimmy Zoyas. I'm a licensed loan officer through Contour Mortgage. We have Stella Nicolodakis, who is a licensed real estate associate broker. We have Tamara Barraquette, who is our resident real estate attorney, and Joe Romandetto, who's an insurance agency owner for Goosehead. So these are the main people you'll be speaking with throughout the entire process. You're gonna need a mortgage, you're gonna need an attorney, you're gonna need a realtor, and you're gonna need insurance at the end of the day. You're also gonna need an inspector, which I did put an inspector who I fully recommend, their business card in your folder. We'll get to that, but that's in the folder as well. So we're just gonna get into it. The seminar outline is buying the home buying process in this market. It's been very volatile the past couple of years. We're going to talk about the steps to homeownership, how to choose the right professional, renting versus owning, the associated costs when purchasing a home, and the do's and don'ts. A lot of people think they have an idea, and most people do have an idea, but we're going to break it down and really say what you should do, what you should not be doing. So some pre-home buying process bullet points. The common misconceptions: many people think that you need 20% down to get into a home. Many people think you should go looking for a home. Once you find it, then you get a mortgage. A lot of different theories out there, waiting for the prices to come down, waiting for the interest rates to come down. We're going to kind of debunk all these things throughout this process. Back to the 20%, you could get into a home as low as 3% if we use a conventional mortgage. There's multiple different types of mortgages. You have the conventional, your FHA, your VA. It's all different aspects to it, different ratios, different programs, if you will. 3% down conventional, you can get into a home. 3.5% FHA, you can get into a home. And of course you can put more than that, but that's the absolute minimum to get into the home. Mortgage before anything. What that means is you want to speak to the bank. You want to see what you're approved for. You want to see how much you can afford. And of course you want to see how much it will cost you out of pocket to get to the home. And of course your monthly payment to make sure that you can actually afford it. You may be able to afford it on paper, but in reality you may not want to pay that much. If you go shopping, we were just saying before, if you go shopping before you're approved for a mortgage and you fall in love with the house, great, you found a dream home, and then you come speak to the bank and you may not qualify for it. You may have to put an extra $50,000, $100,000 down in order to qualify for that mortgage. So the worst thing you want to do is find that dream home and then realize that you can't in fact afford it. You want to know what you should be looking for: purchase price, property tax wise, if there's flood insurance, a whole bunch of different factors that go behind it. So you want to make sure that what you're looking at is you can afford on paper and in real life. So speak to a mortgage professional, find out what you would be qualified for, how much the bank will lend you, and that's when you start looking for homes. Getting pre-approved and not pre-qualified, I'm not sure if anyone's heard those terms before: pre-approval, pre-qualified. Essentially a pre-qualification would be if we spoke on the phone and you say, I work at ABC Industries and I make $100,000 a year and my credit's great, I checked on a credit card. Great, this way you can afford this much, here's your qualification letter. That might all be true, but you might be including your overtime, a bonus. You might not have been working there long enough in order to qualify. So there's a whole bunch of steps when you get pre-approved that we do our due diligence, and I look at every single part of your employment, your credit profile, any liabilities you have, everything like that. So I do all the work up front. It's a lot of paperwork up front, but if I tell you you're pre-approved for X amount, that's as good as gold. You absolutely know you can afford that. If I'm going just based off what you tell me, we don't know if we can use that bonus, that overtime, that commission. There's certain programs that allow it, certain programs that don't, certain programs that have certain restrictions on using it. So generally speaking, and at any point if anybody wants to throw out a question, feel free. Generally speaking, if you're making your regular pay, you have a base salary of $50,000, but I'll give you a perfect example. I have a friend who's a corrections officer, makes $84,000 a year. He makes $110,000 a year strictly in overtime on top of his salary because he works like an animal. He's working 80 hours, 90 hours a week. He can qualify because he's been doing that for 16 years. That's more than enough time. However, if he just started working overtime 8 months ago, a year ago, a year and a half ago, that overtime won't qualify. We need to show a 2-year history. It has to be likely to continue, and then we can use it. If he got it 1 year, didn't get another year, got it another year, that's not a 2-year history. And again, I'll dig deep into each scenario as it pertains to anybody, specifically. Every scenario is specific to that individual buyer, their credit profile, their co-borrowers if there is one, and so forth. So I can speak general, but it's all about your personal situation. The way to get pre-approved instead of qualified is submit necessary documentation. So what that means, it's a lot of paperwork up front. You guys know it was a whole bunch of stuff. It's going to be 2 years of tax returns, 2 years of W-2s, your most recent pay stubs, your most recent bank statements. Verification of employment, meaning that we will reach out to your employer and ask them to fill something out, which breaks down your base pay, your overtime, your bonus, your commission, however else you get paid, if you get paid stock options, whatever the case is. That will verify what we can and cannot use towards your income in order to qualify you for X amount towards your purchase price. Once you get all that in, what I'll do is I'll max it out. So you give me all your paperwork, I know exactly to the penny how much you can afford per month. And you tell me, great, I can afford $1 million house, I don't want to pay that mortgage. So you'll tell me around about how much you want to pay per month, and then I'll reverse engineer it to, all right, if you want to be at $4,000 a month, we're going to look at this price point range, say $500,000 to $550,000, but your property taxes have to be between $8,000 and $10,000. You may be able to qualify for a $500,000 house if the property taxes are $8,000, but you may not qualify for a $480,000 house if the property taxes are $14,000. It's all about your debt to income ratios, which we're going to get to, but there's so many different factors. So a simple pre-approval letter saying you're qualified for $500,000, to me, that means nothing. It's got to be specified on how much down are you going to have mortgage insurance and so forth, how much of the property taxes. And again, we'll break that down a little bit more. At that point, you're either going to be pre-approved or not pre-approved. I'm going to tell you if you are pre-approved, I'm going to tell you how much, like I just said, the property taxes and so forth. Or if you're not pre-approved, then we game plan it. I have a lot of people I've been working with for years to get their credit scores up, to make sure that their income is where it needs to be. If they switch jobs from self-employed to a salary position, or from a salary position to a self-employed position, or salary to hourly, there's so many different factors that take into account, but that's why I do all the work up front to tell you if you're qualified, when you'll be, when you're approved, if you're approved, when you'll be approved, and what steps we need to take to either get your credit up, or your income up, or pay off any debts, etc. There's just a million different variables around. Some common terms that you'll hear throughout the process is DTI, which is your debt to income ratio. In simplest terms, how much money you have coming in through your employment, which is your gross, so it's before taxes, how much money you have coming in per month, compared to your liabilities, so your debts, your car payment, your credit card payments, your student loans, anything that's on your credit report, your credit profile. This does not include food, car gas, car insurance, or anything like that. It's all about what's on your credit report. And a lot of people are hesitant to pull their credit. They think that their scores are going to drop dramatically. Oh, I can't pull my credit up. I'm at an 800, it's going to go to 700. Couldn't be further from the truth. You will get a hit on your credit if you're applying for a mortgage, you take out a new lease on your car, you open up a PC Richards card, all different industries. The only time your credit is being ran is when you're trying to borrow money. Example, the mortgage, you're borrowing money from the bank to buy a house. PC Richards cards, you're borrowing money to buy an appliance. Anywhere else, really, a car lease, a car finance, you borrow money to buy that car. So that's the only time your credit really should be ran, is if you're attempting to borrow money. Now, the way the bureaus work is they see that you're going to all these different industries, they can say, this person's strapped for cash, this person's in some bad situation, they're going everywhere they can, pulling their credit, trying to borrow money from A, B, C, and D. Let's lower that score, let's kind of reset them and build it back up. That's not scientific, but that's the way it works. LTV is your loan to value. Essentially, how much percent down you're putting towards that purchase price. So to keep numbers simple, if the home costs $100,000, you're putting $10,000 down, that's 10%. you're at a 90 LTV. So you have 90%, you're financing 90% of the home, you're paying 10% of your pockets, you have 10% equity in the home. The different brackets in LTV affect your loan as well. So 20% down, that's what everyone thinks when they first start shopping for homes. 20% down is great, not necessary. However, anytime you put less than 20% down, there's an added fee onto your mortgage no matter which program you're on, no matter which lender you're with. It's called mortgage insurance. And that's just kind of a cost, it's a risk cost that the bank imposes on you until you reach that 20% threshold of equity. That's on a conventional loan. With an FHA loan, it stays on for the life of the loan or until you refinance or sell your house and get out of that FHA loan. Homeowner HOI, acronym, it's homeowners insurance. Any house that's mortgaged is mandatory to have homeowners insurance. PMI, MIP, same thing, one's for FHA, one's for conventional. That's that actual mortgage insurance premium, private mortgage insurance, which is imposed on you if you have less than 20% down conventional, or if you're in an FHA loan. So these are just some common terms that you'll hear throughout the entire process. And I don't expect you guys to remember all this stuff, but just if you hear it, you may remember something about it. At this point, does anyone have any questions? We're gonna keep stopping and going, but if you have any questions, feel free to throw it out there. Matthew, Diane, I know you guys are somewhat searching for a home, whether it's aggressively or just kind of looking around. So this question doesn't really apply to you, but for you guys, were you guys considering waiting for rates, and you, sorry, waiting for the rates to come down or the prices to come down, or you're kind of just ready to make a move, or what's?
We've been monitoring and kind of looking at what's been going on in the market, but it hasn't really impacted our decision and the timeline of how we're going to do this. So,
all right, great. Sir?
I'm only working part-time, I just wanted to get information for my brother's help. He's a full-time educator in the city, so I have to go with him, but I appreciate it. The information is great.
Absolutely. So normally there's the people who register show up. We have a few guys that did, so there's usually a bigger crowd. And when I ask the question, are you waiting for rates to come down or home prices to come down? 9 out of 10 to 10 out of 10 people will raise their hand saying, yes, I'm waiting for that. And I've been saying this at every seminar, saying, that's all your competition. Everyone just raised their hand. That's all your competition. So as soon as one of those things come down, if the house is listed at 500 right now and it drops to 480, you have 10 people competing for that house. You're going to pay 510, 520, 530 for that same house. Whereas if you go in there now, you might still have to go 505, maybe even 510. But you're buying the home, you're not buying the rate. You can always refinance down the road. I've refinanced my home 3 times because it made sense to do so. You save money each time. You can extend the term if you need to. And we'll get into that also. You can cash out equity of your home in case you want to pay off debts, go on a vacation, or just lower your rate, which lowers your payment, or lower your rate and extend your term, which then lowers your payment significantly. The other way is if you're in an FHA loan and you got your credit up, you're where you need to be, you refinance it to a conventional loan, and that mortgage insurance comes off. So you're lowering your rate through the interest rate, your payment through the interest rate, you're lowering your payment because your mortgage insurance came off, and then you can keep your term or you can extend it, and either way your payments can be that much lower each step. So I've been saying that to everybody for months, and I came across this on Instagram, I want to say about 3 weeks ago, so we just threw in the slide today because everyone knows who Barbara Corcoran is, right, from Shark Tank, Corcoran Group. I just came across this.
The question I ask every day of my life is now a good time to buy a house. And you know what? Nobody thinks it is, but I'm going to tell you something else. What's holding everybody back is the higher interest rates. They don't seem so high to me. So I remember 18, 19%, so remember they can go higher. But the most important thing is once you wait until interest rates go down, all hell's gonna break loose. Everybody's been thinking about buying a house, gonna be out looking and overbidding every house. The prices are gonna go through the roof. So pick your poison. High interest rates down, which aren't so high, or super high prices once they come down. Your choice.
I just came across that and felt the need to add it in just because it's the same thing I've been saying the whole time. You can always refinance the house down the road if you need to, if you want to save money, but it just makes perfect sense. I mean, I grew up on Long Island, and speaking to my parents, my father asked me all the time, what are the rates today? What are the rates today? I'm like, oh, you know, they went up. They're almost 7%. He's like, I was paying 14% in '86. I'm like, God, I was 3. I had nothing to do with that. I have no idea. But, you know, in the scope of things, yes, they're a little bit high, but I think that we all have that hangover from when they were 2 and 3% 2 years ago, which is incredible. That's essentially free money. You could get more, you could get 4 to 4.5% at Apple Bank down the road on a 7-month CD. You know, that if a bank is paying you that much, it's those rates a couple years ago were just unbelievably low, and I hope we see them again, but I don't see that ever happening again. It just kind of created turmoil in the situation we're in now with inflation and just money, everything costing more. We're gonna go to the pre-approval status now. If you are pre-approved, you get that pre-approval. I did all my work on my side. You handed all your documents in. I went through it all. I'm gonna jump on this one, I'm sorry. Start interviewing your realtors, start interviewing your real estate attorneys, create a team. Everyone communicates with each other, so we're all on the same page on what you're looking for, when you're looking to get into the place, and anything else that comes up. We're on the same team. If you're not pre-approved, then we game plan. If it's a credit situation, how do we get your credit up? If it's a debt to income situation, how do we mediate that? And there's certain ways we could do everything. We get very creative under the federal guidelines. My bank, Contour Mortgage, goes by the federal guidelines and the federal guidelines only. All of the not all of the banks, but most of the banks have overlays, which is they go by the federal guidelines, but they also add their own internal guidelines. They don't want to take on any additional risk, so they make things stricter and stricter and stricter. So some places won't do 5% down if you're self-employed. Some places won't do credit scores under 620. We go by the federal guidelines, and that's it. We're willing to take the risk to get you into a home. And that whole process, we're trying to get you into a less risky situation where your credit profile is great. You're comfortable with your payment. You're comfortable with your living situation. Nobody wants you to, great, you got a home, but you can't afford it and you're gonna foreclose. Nobody wants to put any other person in that situation. It's not bad business, it's bad life. You know, that's just not the right thing to do. So if you're qualified, you get qualified for say $500,000, but you're really looking for that $600,000 home, how can you qualify for more? A couple of reasons here, a couple of ways here is a multifamily property. So if you find a 2-family home, a mother-daughter, 2-family, we expect you to live in one of the units, and we expect you to rent out the other unit. So again, keeping the numbers simple, if the going rate in that town, that specific area, let's say Levittown, of a multifamily, number simple is $1,000 in rent a month, you would get credited for 75% of that, meaning $750 a month as proposed income towards your debt to income ratio. Meaning that would offset part of the mortgage, lowering your debt to income and then furthering your purchasing power, so you can actually afford a little bit of a more expensive home, because we expect you to rent the other unit out. You know, if it's just the 2 of you, you're gonna live in one unit, you're not gonna live in the other, you know, you guys are gonna live in the same unit. I mean, some people say, yeah, that'd be great, but you know, realistically, you're gonna rent it out and make some money off of it and help pay that mortgage down. Another way is an accessory unit, and believe it or not, you know, a lot of basement apartments are illegal. However, you can get Section 8 rental from them, so that's from the government, so it's kind of makes it somewhat legal. You can have your friend move in downstairs, as long as there's different parameters depending on the loan you're in, but as long as it has, for the most part, a separate entrance, a bathroom, and a kitchen, we would consider that an accessory unit where you can actually get proposed rental income to help you qualify. Again, each specific person has their own specific guidelines on how they would qualify for it through their credit profile, through their income and so forth, but these are available options, and they're not impossible options. They're very, very likely to happen unless you have a really bad scenario going on that we have to fix, and we would fix it. Any questions about that? Rental income or anything like that? All right, so basically, how do I choose the right real estate agent or broker? How do I choose the right real estate attorney? How do I choose the right insurance person? We have 3 of the best here, and I'm going to pass it along to Stella, and she's gonna talk about real estate.
fun of me because of my little paper today. And truthfully, the reason why I do have it is because if I don't actually break some stuff down, I can talk for hours. So it kind of works for everyone's benefit. I'm Stella. I'm an associate broker with Douglas Elliman. I've been doing this for a little over 10 years. And I work with a lot of first-time home buyers. Okay, so I kind of missed before. We said that, did we start our process? Have you started looking for a home?
This is the start of the
This is
process.
the start, oh, perfect. And we have someone who already started. Okay, that's great, that's awesome. I'm going to just basically quickly list the process from beginning to end and focus on 3 of my favorite, what I think are the most important aspects of the whole process. So first, let's answer the question, why do you need us? So a part of the transaction, we have a seller's agent and a buyer's agent. A seller's agent works in the best interest for the seller, and then we have the buyer's agent, which works in the best interest for the buyer. If we eliminate one side of this representation, someone's needs aren't fully fulfilled. So it's in your best interest to have somebody represent and focus on just you. When we start the whole process, so from beginning to end, we have a thorough buyer consultation. So let's say we start working with an agent. This is how it should begin. A thorough buyer consultation, the showing process, negotiations, our accepted offer, inspection, attorneys, and contracts, and then the best part, closing. Buyer consultations. Any determined and experienced buyer agent will have at least a 15-20 minute conversation with you. Basics. What kind of house are we looking for? Style. Do we like capes? Do we only want a colonial? Do we prefer a split? What size? What lot size do we prefer? Any special amenities that you need for your everyday life? Do we only can be 5 minutes away from the train station, or we have to be walking distance to a certain store? I've heard it all. But it's super important because your purchase is completely different than someone else's purchase, right? We have to make life a little easy. So during this buyer consultation, all this information that I receive from you, I actually put together a personalized approach just for you. So when I'm looking for properties, and I know that, I'm sorry, your name? Christy. So when Christy told me that I can't stand capes, I want a colonial or a split level home, construction is okay, but I don't want anything too much. No gut renovations, maybe a cleanup renovation, what I like to call it, maybe a painting job, redo the floors, and this is my price range. I don't want to go higher than $650, and my taxes need to stay at nothing higher than $13,000 a year. Perfect. So I take all this information and put together a personalized home search for you, and I start sending you listings. And you, as I send you listings, you respond back to me like, Stella, I love it, hate it, I want to see this one, get me in an hour. So, which is great, right? So I say, what day are you available? What time works best for you? I will meet you there, and we'll take a look at the homes, and then we'll go from there. So it all sounds easy, but there's actually more homework for us and that your agent should be doing for you, so we can always stay on the same page. Jimmy mentioned something that was so important before. It's so important to have a team of professionals from the very beginning and not wait till last minute. So throughout that buyer consultation, that initial conversation that we're gonna have on the phone, I'm gonna ask you, hey, do you have a home inspector that you work with? Do you have a real estate attorney that you prefer to work with? And if you don't, it's okay, because I have a few recommendations I would love to share with you. That I know that I work with this specific team that I know that will get your deal done. So fast forward, we go to the showing process, which is fun. I love it. I can look at 20, 30 homes a day, and it's actually exciting. I really love my job. We're going to property number 1. Say we have 5 homes scheduled for Thursday evening. Now, my homework isn't only just to show up to walk through the property with you, but I put together a comparative market analysis for each and every single property that we're scheduled to see today. Why? Because I want us to be prepared. If you like property 1 and 2, I could show you that recent properties have sold, similar properties have sold in the area for $625,000, and condition is the same, the lot size is the same, similar, the building square footage is similar, and this is where we need to be with our offer if you really want to win this house. Does that make sense? I have a really bad habit of speaking fast, so stop me and ask any questions whenever you want to. So this way, I do my homework so we're on the same page, so you can understand where and why this asking price is where. If they're asking $649, why are they asking $649? Well, guess what? This properties 1 through 5, all similar to the one that we just saw, and this is where they all sold. So let's say we find the house, and I'm like, seller, we love this home, we really want it, let's talk about it, what's our next step? So I always like to tell my buyer, this is what I want you to do. I'm gonna show you the homework that I put together. This is the range where we should be in, but I want you to think of 2 numbers, our starting number and then our highest number. So depending on the activity on the home, which again is part of my homework and to let you know what's going on, has the house been sitting on the market for longer than 3 months? Did it just hit the market 2 days before we were able to see it ourselves? All these little minor details play such a huge role. So when we put that price range together, that starting offer to our highest offer, that's where our team comes in play, because it's also my job to make sure when I present your offer to the seller's agent, which will get automatically forwarded to the seller, that when they see our offer, I want to include and say that our attorney, this is our attorney's contact information, this is our home inspector, they are available to inspect the property as early as tomorrow at 2 p.m. And when the seller sees this and the seller's agent sees this, that confidence level just went through the roof, because they're like, wow, they really have their stuff together. These people are really ready to go. Because when the seller hears, hey, 2 days pass after they accepted your offer and we still haven't scheduled a home inspection, it scares everyone. So they start to question your motives. Are you really serious? Did you find another property? Are you really gonna move forward with this offer or not? So that team is super, super important. I cannot stress that enough. Do we have any questions so far? Nothing? Okay. And your agent should also, their communication skills should be up there. Their negotiating skills, they should love, that's my favorite part of the job. I'm not gonna lie, that is my favorite part. And that is really the bulk of it. Your agent should, it's a personal relationship. They hold your hand, speaking right, they will guide you, and they will also actually kind of take that stress off your plate, right? But if you think about it, the hard part's already done. You guys already saved up that down payment, and you made the decision that you want to buy a home, which is awesome. Going back to a little what Jimmy mentioned earlier, everyone is scared to make moves now. They're worried with the rates and what's going to happen. Oh, there's going to be a crash. No, guys, I will tell you, there's one thing that actually I love to share with people is that real estate is local. So you have to check with a local professional to see, hey, if I'm looking to purchase a home in Levittown, what's the market like in Levittown? Are we still seeing heavy activity? And we are. In general, in Nassau County and Long Island, we are. Even in New York City, we still have a lot of overbids and just a lot of activity. Don't wait. There's nothing better. That feeling, once you close and you have those keys in your hand, I will say, it is the best feeling in the world. It's such a huge, it's an accomplishment. And I hope every single one of you get a chance to feel it. Do you guys have any questions? Feel free to go ahead.
How much does a buyer's agent cost?
Oh, great question. Best part, actually, there is no charge. 99% of the time, I like to say that buyer's agent gets paid through the seller's agreement and commission that they negotiate with their seller's agent. So we get paid from that side. There are some instances where a buyer can make arrangements and sign contracts to work exclusively and to get paid as a buyer's agent. But here in New York, 99% of the time, we get paid through the seller. Any other questions? No. Thank you.
So I mean, it's a free service. She will do all the work for you, finding the houses. Of course, you could look on your own. You could check Zillow, you could check Realtor, all that stuff. She has access to MLS listings and some other sites that I don't know what they are really, because she's a realtor, but she can find these things right away. You get the automatic emails. send it to you, set up the appointments, and tell you why you could expect to go over or under asking, you know, just like she knows what's going on at certain jobs, know these things, and she'll relay that information. Now, again, working as a team, what we like to do is, if you guys see 5 houses, Stella sends you 5 houses, you're like, I wanna see houses 1, 2, and 3. We'll be in communication, the 3 of us, and I would say, send me those 3 houses. I'll tell you what you can expect to pay out of pocket for, you know, closing costs and down payment, and then what your monthly payment will be. Now, if those numbers work for you, then go take a look at it. If you say that those numbers are crazy, no way, don't waste your time looking at it. Falling in love with it and saying, you know, that's not the number I want. Stay firm to your number. That's why she said come up with the low and the high. Stay firm to your numbers. And then again, when you hear something like $5,000 over, it's really not what you think. If you're putting 20% down on a home, right, and it's $5,000 over asking, that's really $1,000 out of your pocket at closing costs. And it's, depending on the value, let's say it's a $500,000 house, it's probably about $26 a month in that range. So it's not as significant as you think. But when you're talking about $50,000, $80,000, $100,000 over, well, I hope your pockets are deep, because people still do that randomly sometimes. And Dominique,
That's it.
it happens. But you gotta. If you love the home, pick your number, stick with it. Don't go overboard. Make sure it works for you. So homeowners insurance. We have Joe over here. He's the owner of Goosehead, and he's gonna let you guys know a little bit about insurance.
Guys, my name is Joe Rometto. I'm with Goosehead Insurance. You guys probably haven't heard of Goosehead. It's a broker firm. So what I do is I write with 30 to 40 companies to make sure you guys get you the best policy with the best price. So you guys have done your shopping, you've gone to your mortgage guy, you've gone to your realtor, you have a signed contract. Now it's time to call me. It's the most boring part of the whole process. It's also the most frustrating. The biggest thing with homes in home insurance is location, the size of the home, and the condition. Okay? A 15-year-old roof to a 3-year-old roof could be a $750 difference in your premium. Okay? A home in Mineola, the exact same home in Levittown is going to be a different price. Your credit has a lot to do with it. Okay? So if you guys are, it's called a credit score, but it's an insurance score. You guys are a 3, which is an excellent credit. You guys are an 8, which is what they call fair. You're buying the exact same home in the exact same place, your payment's gonna be about $1,200 less. It has a ton to do with it. So the easiest way to do it is, as you guys are looking, as you're working with the whole team, and you wanna figure out what your payment's gonna be, you can give me a call. I don't charge for a quote. I'm not gonna say, hey, listen, you made me run 5 or 8, you know. Give me a call, because that's all part of your monthly payment. That's all part of your escrow. It's taxes, mortgage, and insurance if you guys are putting it into escrow. So it's great. You figure you found a house for $600,000-$700,000. Jimmy says, hey, your payment needs to be about $1,800 a month. Your taxes fit in, and your mortgage, you're like, hey, that's great. And then I come in and tell you, hey, your insurance is $2,800 a year. I'm not blowing the payment out. So you gotta know what you're working with. That's all part of your mortgage payment, okay? Rates are going up, but like Jimmy said, you're not battling anybody, okay? It's when you find a home and you call, it takes me 5 to 10 minutes. It looks it up, I can look it up, I have access to property assessors. I can tell you how big the square footage is, when the roof was replaced. If I don't, I will ask you, hey, listen, call your realtor, find out when that roof was replaced. It's saying it hasn't been replaced in 30 years. That's something you guys want to know. You don't want a 30-year-old roof on your house that you've just dropped $800,000, $900,000. Okay? Siding, the condition of the home, any trip and fall statuses. In other words, is there, like in my house I had when I bought it, we had trees in my backyard. We took all the trees down. The next year we started having holes in the backyard. Roots started decaying. So it's all things to look at. Location of the home. Another big thing. House in Woodbury compared to a house in Levittown, gonna be different prices. All right. It takes 5 minutes. I don't charge you for a quote, but we're all been through insurance all our lives since we're adults. You know, the more I can put together as a package, the lower the price comes. So if I can put your car with your home and an umbrella, and that's something you guys also need to think about. You're now homeowners. Start thinking about an umbrella policy with the homeowners insurance. It's great you have a $500,000 in coverage and liability. Somebody trips and falls and sues you for $1 million. It's better to have that $1 million extra with an umbrella policy with that homeowners policy. It's a safety net. All right. Anybody have any questions? No? Guys, good luck. If you guys need anything, my card is in the folder. Give me a call. I'll be happy to answer any questions you guys have.
Again, that cost of the insurance is broken down over 12 payments. So keep numbers simple, $1,200 a year is $100 a month. So now that monthly payment, that debt to income ratio is your housing expense, is your principal and interest for your loan, property taxes, and your insurance as well. So PITI. Assuming you don't have mortgage insurance as well, but that's included in the principal and interest. So that is all a factor into that debt to income ratio. If you're near the water, if you're on the water, you're gonna have flood insurance, and that's a high cost, so we have to take that into account while we're searching for homes. You tell me, I want a house on the water, I wanna dock my boat and back. All right, great, we gotta find out what flood zone it is, how much that's gonna cost you, because that's gonna factor into the payment as well. So I know we're kind of giving all this, it's money, but again, back to where it works for you. We just want to be on top of our game. Just like you said with the credit, your credit can be your best friend, it can be your worst enemy, because missing one payment on a credit card is detrimental, honestly. One 30-day payment, you could be at 800 score, you could go down to 680 within a matter of days by being late because you forgot to pay that bill. I'll give this example. A friend of mine, he does a lot of construction work in his house. We're looking for homes for him. His credit was fine. I'm like, all right, it's expired, but I'm not going to pull again until we're getting ready to start looking again. Like, all right, we want to start looking again in a month. I'm like, all right, so let me pull it now, so that way if there's anything comes up, we can look at it. They have great credit. They switched from Optimum regular to Optimum Business. These guys own a construction company, and didn't return one of the cable boxes because they were, true story, this happened about 3 months ago. February. Didn't return one of the boxes because they kept using it. They still have Optimum. That account went into collections for $320 because they didn't return the cable box. They're using it. They still have an account. The account changed. All right, so it gives us a little time to work on it. I gave them the phone number on their credit report. It's actually, he lives in Farmingdale. I live in Farmingdale. The place is on 110, Optimum Collection Service, whatever it's called. They're taking care of it. It's been taken care of since. They actually were able to get it removed because, I mean, that's just ridiculous. But if we didn't look at that, they went to buy a home, you know, they're pre-approved, they're still using that old pre-approval, which I like to update it very, very often. I don't have to pull credit to update it, but I like to, every time you're looking, I just kind of rerun the numbers and figure it out. If we didn't do that, you know, a month in advance, I mean, he still hasn't found a place, but if he went out and found a place today and wants to put an offer in, I'm like, all right, let me pull your credit. We see that. All right, we're in bad shape here. Your interest rate just went here, your program changed, and we got to figure this out. So it's being prepared. That's where I'm trying to go. Always being prepared. And I don't want to continue to pull credit. I will when it's necessary, but I will always look at the numbers and the profile, always. Because there might be things on there that you have no idea about. They had no idea that cable box is on there. You'll most likely know if you missed a credit card payment or a car payment, something like that, but very detrimental to be late or miss anything. So make sure you guys are on top of that. And now for my favorite part, our favorite real estate attorney, Tamara.
Oh, thank you. Hi, guys. So my name is Tamara Barricott. I'm a real estate attorney for 23 years. So I only handle residential, commercial matters. You get a ticket, you pay it, because that is not my field, okay? I happen to specialize in the 5 boroughs, Nassau and Suffolk County. I am a Nassau resident myself. And just to go over, now that we've been scared to death about the whole financial prospect of this whole thing, let's talk about the really fun part, the legal aspect of it, all right? Now, just to recap, have met with Jimmy. You know what you can afford. You have now sat with Stella. You found the house of your dreams that is within your price range. Stella's made a killer offer. Sellers just accepted. What happens next? Well, what happens next is a couple of things. This is where the excitement really gets going. Stella's going to send out a form. It's called a binder agreement. And it's going to go to me. It's going to go to the attorney for the seller. It is the attorney for the seller that prepares the contract, guys. So the contract is always steered in favor of the seller. That is why you need to have an attorney, whether it's me, whether it's somebody else who's an actual real estate professional, specializes in real estate. Do not go to your general practitioner attorney who handles your matrimonial, your divorce stuff. Go to a real estate attorney, okay? That attorney is going to pick apart that contract, go over all of the terms. What is going to be in that contract really is the following. It's going to identify who's selling to you, who you are, what house you're buying, what appliances you're getting in this deal, the price, how much down payment, and our time frame in which to get our mortgage commitment. Now, since we're here, I'm going to assume that everyone is going to have a contingency on getting a mortgage in order to buy a home, okay? When you sign a contract, 9 times out of 10, that contract is going to say, buyers, when we sign this contract, you are going to have 45 days, or your bank is going to have 45 days to tell us, the sellers, that you have qualified for this loan, and we are going to be moving forward on this transaction. If within that 45 days, the bank should, God forbid, give us a denial letter, then you will be getting back your down payment, and everyone will parting ways as friends. Okay? If 45 days comes and we need more time, that would have to be negotiated with the seller. Seller does not have to give you more time, but they do have to give you back your money. But working in a positive world, we're getting that approval and we're moving forward. Another part of the contract, and what my job really is as counsel, is to make sure that the house you are getting is free and clear of any title issues. Is anybody familiar with what title is? Anybody heard that phrase before, title? All right, so listen, we've already met this fabulous man, homeowners insurance. When you buy a home in New York, there are 2 types of insurance you get. You will get your homeowner's insurance, which protects the physical aspect of it. Fire, theft, flood, all those fun things, those biblical things. But in New York, we need title insurance, and that protects the legality of the house. It's telling me that John Smith, who's saying that he's the seller and signing this contract, actually owns this house, okay? That when I close on this house, there are no liens, there are no judgments, there are no violations. The taxes are paid, the water is paid. You are not inheriting any problems from this guy or anybody else that came before him. Okay, that is my job as counsel. Furthermore, what are we buying? Are we buying a 1? Are we buying a 2? Are we buying a 1 with an accessory unit? Very different legal terminology. I have to make sure that you are getting a house that is deemed legal, not just the way it looks, but that the county says that it's a legal 2-family, that the town says that it's a legal 2-family, okay? That is my job. I order title, I review it, I ensure that the seller gives us clean title, and if they do not, that you get back every single penny that you put down when you sign the contract. In terms of physical representations, we talked about that in the contract as well. So I want to bring you back to when Jimmy was talking about his home inspector. Now listen guys, we all know that once you sign a contract, that is it. We can't go back in time. We can't rewind, okay? I stress that you do meet with your home inspector, and that would take place before you sign the contract. So from the time that Stella says, yes, you got the deal, the seller's attorney is preparing the contract to send to your attorney. And before I go, hey, come into my office, or hey, let's docu-sign this contract and do a phone conference together, you will have had your home inspection done. You would have had a report and I would have had it and we would be reviewing it together. Why? Well, because when you sign a contract, the standard contract says, buyer, you're buying this house as is. So if there's a broken window now, you're getting a house with a broken window, okay? The only representations that are usually made is that, electricity, plumbing, heating, appliances will work, and that roof will not be leaking. Now, it could be 5 layers of shingle on that roof, as long as it does not leak. Everything else is as is. So a home inspection is important, number one, because it will tell me the condition of the house. Things that fall outside of the parameter of what I just said. What if the foundation sucks? What if something's wrong with that? We sign a contract and then you guys decide to do a home inspection and you're like, Tammy, foundation's an issue. There's bad termite damage. What are we gonna do? I'm gonna be like, guess what? Nothing. We can't get out of this contract. You must do your home inspection beforehand. I can negotiate it, Stella can negotiate it, a repair, a credit, something. Or guess what? If it's too detrimental, we simply know this is not the house for us and we move on. Okay? Number 2, the reason why I love a home inspection is because, guys, this is probably the biggest investment that you're making in your life. Okay? We need to be educated on what we're buying. I need to know that if I'm buying this house, the boiler, yeah, it's functioning now, but am I putting in another $10,000 next year, 6 months from now? That's something for you to know, because the seller doesn't care. When we close, whatever legal and physical representations the seller has made to you, end the minute they hand you the keys. So, when we sign our contract, I will be asking you, have you done a home inspection? Are you gonna do it? What repair issues are there? Because I will incorporate them into, or your attorney should, I should say, should incorporate those issues into your contract, okay? Now, once mortgage has been approved, title has been reviewed, everything looks legal, I would be working with Jimmy and I would be saying, hey, are we ready to close? Because there is a difference between having an approval for your loan and us having the ability to close. Once a mortgage commitment is issued, you usually need about, what, 2 weeks or so to get the file what we call clear to close, okay? So at that point, the parties would be getting together. I'd be contacting the seller's attorney, I'd be contacting the bank attorney, and we'd all be talking about, hey, when can we all get together and close on this property? So, once we pick a date, you would be doing another walkthrough with the fabulous Stella. You're going to make sure that the house is contractually the way it's supposed to be. Electric, plumbing, heating, appliances working. Whatever repairs we discussed have been fixed, okay? Everything vacant and broom clean. I want to talk about that in a second. And we're ready to go. Jimmy would be giving me his information for his bank and I'd be working on getting net proceeds to you. We'd be going over numbers, we'd be going over adjustments. When you buy a house, there are adjustments that are done because we as buyers are only responsible for the bills on the house the day we close, going forward in time. Seller's responsible night before closing, going back in time. So appliances or utilities, I should say, don't run against the property. You would be calling gas and electric, hey, I just bought. They would be calling gas and electric, hey, I just closed. So we don't have to worry about that. Water is private, so we'd be calling American Water, or whichever town we're in, and opening up an account. Taxes. Taxes are always paid at a certain point during the year. So we would be making an adjustment. So theoretically, let's say the town taxes has been paid for the first half and we're closing today, but this half period ends the 30th. I would be giving the seller a prorated version from today through the end of June, just to make everybody even, Steven. I would get those numbers, I would review them with you. So this way, before you go into closing, you're aware of what certified check you have to bring. And I would be there to hold your hand and explain all those fun bank documents with you, okay? I do want to talk a little bit about one thing. Jimmy was talking about multiple properties, maybe buying a 2-family, something like that. Guys, you have to be very, very aware of what's going on with landlord-tenant situation here in New York as a whole, okay? So if you're looking at property, and this is really important because I know Stella does it all the time, if there's a tenant there, do they have a lease? Do they not have a lease? Are we getting rid of this tenant? If you are looking to buy a home that's vacant and there is a tenant there, we're not closing on that home until it is vacant. We're not waiting, we're not holding money in escrow for a tenant to get out. I've been doing real estate, and when I say that I mean real estate related matters, landlord, tenant law, all the sexy stuff, right? Evictions, non-payment cases for 23 years. And I tell you right now that being a landlord in New York is terrifying. So, if you are looking for a home and there are tenants there, and sometimes it can be a good thing. When tenants have been living there, they've got a stake in the house, you will be checking their credit, you will be running it, Stella will be doing it for you, she's amazing at it. She's also gonna be able to tell you what the fair market value is of that apartment if you were to rent it in the future. Okay, but that is a little bit of a stickler, and now that you're looking at homes, I just kind of want you to have a pin in that, okay? Be mindful of that. Anything else I'd really want to tell you about the closing process is communication is probably the most important thing. The way I tend to work with my clients happens to be that all of my clients have my cell phone, I have full office staff. We tend to always be on email chains with clients, with realtors, with banks, so that everyone is aware of what everyone else is doing. It can be a really daunting process, and I don't know if anyone overheard me before, but even buying my own home, and I'm an attorney, my husband's an attorney, I was terrified. I actually had an attorney represent me because I didn't want to make any mistakes, and I've been doing it forever. So I know how stressful it can be. Stella specializes in first-time home buyers, as do I. We're very much into the hand-holding process. You're gonna realize going through that it becomes really somewhat psychological, somewhat emotional, you know, that you're relying upon your professionals. So you get more of a relationship out of them. So just make sure that it is somebody that you feel you can communicate with, that is answering your phone calls, that is answering your questions, and that is working in conjunction with your team. Okay, any questions? All right, well, I'm gonna pass it back to you, Jay-Z.
So she's there to protect you. I'm here to try to give you guys the money for it, and Stella's gonna find you what it is, what the house is. Now, just to piggyback also with that multifamily, that accessory unit, just because you qualify for it, you really have to think to yourself, do I want to rent to somebody? If that person stops paying me rent, how long can I survive paying the mortgage without their rent? So it's nice to have it, extra income, but if that person, great for 2 months, all of a sudden, I'm not gonna pay you guys, it's gonna take you X amount of time to get me out. And you can't physically remove them, you can't change the locks, there's very little you can do. Keep that in mind. Can you afford it without that supplemental income? Now, on paper, maybe yes, no, it's all about reality. Can you do it? How long can you do it for? And make sure you don't change the locks. You don't put their stuff on the front one. You don't physically remove them. You can't do that. You'll be in jail and they'll be taking over your whole house and not paying for it. So, something to keep in mind. It's a risk, but there's a reward to it. It's just something that you have to make sure that you can afford with or without that supplemental income. Tamara said escrow, Joe said escrow. Does anyone, I know everyone hears the word, does anyone really kind of know what escrow is? Essentially, it's, to break it down, it's almost like a side savings account. So when you're paying your mortgage, you're paying your principal, your interest, your taxes, and your insurance, right? So every month, you're not paying a portion of your taxes and a portion of insurance to the town, to the insurance company. You're paying it to the bank. The bank takes that money, whatever your cost is for each one, and puts it almost into like a savings account. Then when the tax bill is due, the bank distributes it to the town, to the county. When the insurance bill is due, the bank distributes to the insurance agency. It's not a savings account because you can't access it and take it back out, but it's almost, they have it there for you so that you don't miss paying your taxes, you don't miss paying your insurance. So that's what that term essentially is. When Tamara says, we'll hold money in escrow until they fix this, that means, you know, the seller is guaranteeing they're gonna fix this electric before closing. So part of your down payment she's gonna hold on to in her account and not gonna give it to the sellers until they fix what they said. Essentially, it's just a safe key from a third party, if you will. I kind of explained a little bit. So the do's and don'ts, and again, we're gonna break down a little bit more, we don't have that much left, but do stay gainfully employed. Try not to get yourself fired, don't stop showing up to work. If you are going to change jobs, you can, depending on the job, where you're coming from and where you're going to. And I'm talking about in the mortgage process. You can go from one salary position to another. You can go from self-employed to a salaried position. You can't go from a salaried position to open up your own business and start that business during this process, because you need that history of work, that history of income in your current field. If you do, there's maternity leave, which is not losing your job. That can be accounted for. If you do lose your job, that will severely harm your situation. Now, you may still be able to qualify with one income, but again, try not to get fired. Layoffs happen, but try not to get fired. If you do have a great opportunity, discuss it with me first. And if I see the scenarios like, this is gonna hurt you, can you push it off, 3 weeks, we can get this thing closed real soon. Let's close it and then do whatever you want. But make sure we're in constant communication about that. If you're even thinking about it, when the right time would be. That's that part. Maintain good credit, make sure to keep paying your bills. During this process, don't open any new credit cards. Don't close any credit cards. If you have a credit card since, for the past 5-6 years, you have great payment history on it, that's part of your credit profile. It shows you've been responsible paying this debt 5-6 years, and you pay it on time, all the time. If you close that account, it's almost like it didn't happen. It'll still be in your report, but it kind of takes away that good job paying that credit card off. So don't open anything, don't close anything. If you open something, you can increase your debt, and you'll get a different industry pulling your credit. It can hurt your score. Keep your balances low. That's a simple trick to keep your scores up and keep your debt to income low. So I'm just going to get into that with the debt to income part, right? If you owe, keep numbers simple, you have 10 credit cards, you owe $1,000 on each one, you owe $10,000, right? If your minimum payment for each one is $100, your minimum monthly payment is $1,000. 10 cards, $100 a card, it's $1,000 a month. If you have one card where you owe $10,000, same amount of money, but it's all on one card, and your minimum payment is $100, you owe $100 a month instead of on that same debt instead of $1,000 on the same debt, and that will severely. It won't severely impact you. It will help you in the debt to income ratio. You have the same sum of debt, but the amount that you have to pay off every month is much lower. So it's not by the amount of debt you owe; it's by that monthly payment that goes. That's the way it works. As far as depositing any money, if you have some sort of skill, let's say you're a carpenter and you do some side work, you get paid cash, that's great, more power to you. However, all money has to be sourced. So you can't just say, yeah, I've been keeping this 20 grand under my mattress for the past 6 months, I'm gonna go buy a house and take it to the bank real quick and let's go close. The bank is gonna see it and say, where'd this 20 grand come from? Anything being deposited into your account should be from your employer. All money has to be sourced, taxed, this and that. So for lack of a better example, the bank is gonna look at it like you just borrowed 20 grand from a loan shark, and if you don't pay him back in 3 months, he's gonna do something to you. So you're gonna pay that person back before you're gonna pay the bank back, because the bank is gonna send you notices, you're late on your mortgage, ruin your credit, eventually foreclose, but in that next 3 weeks, you gotta pay this guy back. So the bank will look at it as a risk. This person owes somebody else money who they're gonna have to pay before us. We're lending $500,000, but that 20 grand has a much severer impact than what we're offering.
I just have a question on that.
Yeah.
So, for life events like ours, we got married, we get monetary gifts from people, we deposit them into the bank. Now they're gonna be looking at that as suspicious. Would that impact our?
So there's a story behind that. We can explain that.
Okay.
Your marriage certificate. Just got married. These were gifts. Perfect. Now the money goes back being sourced 2 months, right? So we're in June right now. So let's say you guys found a place today. We're gonna have April and May bank statements, and they're gonna look at every transaction, Zelle, Venmo, all that stuff. Now, if it's a couple bucks, not a big deal. I like to tell everyone, do not deposit any cash. In reality, there's a certain number you can depending on your income. Let's play the rule of $0. If you have it, call me, I'll tell you yes, no, or how to do it. Down payment from gifts. Parents wanna help out, brother, friends, cousins, whoever it may be, great. We still have to source it. If it's a conventional loan, I need a picture of the check. I need the statement of you depositing into your account, showing that the money came in, and we'll write up a gift letter. I'm giving my cousin $10,000 as a gift. Not I'm loaning my cousin $10,000, which I expect to be repaid. I'm giving my cousin $10,000 as a gift. If it's FHA, only certain people can give you that gift. It has to be family, employer, close friend. If it's a close friend, we kind of have to prove the relationship. There's more hoops to jump through. That's my job to figure it out. With FHA though, it's not like you can give somebody, I have 20 grand, I have 20 grand in cash, do me a favor, put it in your account and give me a check for that 20 grand. Sounds like it works. Works conventional, technically that works conventional, but FHA, we need their bank statement. We need their 2 bank statements to show that that situation didn't happen. There's stricter rules for every specific scenario. That's why any questions always ask me, hey, can I do this? How do I do this? Should I do this? Why shouldn't I do it? Everything's very, very specific on how things are sourced, how it's traced back, and how we could use funds A, and we can't use funds B, what the process is. Obviously, do consult with the team regularly. We're gonna be, I talk to some people every single day, multiple times a day, some people once a week. Everyone's excited. It's the biggest, like Tamara said, it's the biggest investment in your life. Right now, if you're renting, you're paying somebody else's mortgage. You're paying a mortgage, just not your own, and you're not getting the equity out of your home. When you're paying down your mortgage, you're gaining equity. You have value in there, and you owe less and less, and your value is higher and higher and higher. Even if the market were to come down a couple of percent, it's always gonna go back up. Especially around here in New York and Long Island, no matter what, your value will be worth way more down the road when you're looking to sell the place. You can refinance, you can take money out of that and buy another place with it and use that as an investment, or move into that place and rent this place out. There's so many different ways. You're building wealth. You're building generational wealth. If you have kids, you could leave something for your kid, or you could sell that house and help them out with college, with the car, with buying a house. You're building for the future, and you're investing your money into something that's tangible. It's a house. How many people love Long Island? I grew up here, I'm not leaving here. You know, I love it here. There's so many people who won't leave, there's a lot of people who do leave. But for every person who leaves, there's other people knocking on the door trying to get in. You know, these houses go up and they go up for sale and they go very, very quickly. You know, there's limited inventory for a couple of reasons, because people love living here. Other reasons, they have low interest rates. You got a big house, a lot of people want to downsize, save some money, but they have that 2% from 3 years ago. Downsizing, it's going to cost them the same. That's why that inventory is not there. But you have people going to South Carolina, Florida, Tennessee, Arizona, Texas. Those places are booming right now, and those values are starting to go up as well. They're all building. Everywhere you look, the values are going. California, I don't think that much. It's kind of nuts out there, but everywhere the values are going up. Going up and up and up. And it's an investment that will pay you back in multiples down the road. Any questions at the moment? So the entire process, you know, we went through the pre-approval. Well, we went through the pre-approval. Stella found you the house. Tamara got you the contract. And by the way, when they're sending the contracts back and forth, it's going to look like a third grader was allowed to use pen on their homework because they're scribbling. She's scribbling out their lawyer stuff. Lawyers scribbling out. They go back and forth until there's no room to say, all right, we agree on this. It's actually pretty funny that it's all legal, but there's scribbles everywhere. So once you get those contracts signed, I will get the contracts from Tamara. I will submit them to underwriting for approval. Now, we did all our homework in the beginning. So if I gave you that pre-approval, I know underwriter's not gonna have any issues. They might ask me for, hey, what's with all these deposits? Well, here's the marriage certificate, and here's what happened, that's what happened. All right, there's a story behind it. I like to tell everyone that underwriter's a judge. you're my client, so I'm your attorney in this aspect. What's the story? Help me prove to the underwriter. Let the underwriter let us through. You know, we're innocent, type of thing. I feel like underwriters like give each other high fives when they kill a deal. So we go in there where they can't poke a hole anywhere, and they look at it like, all right, I got nothing here. All right, go buy your house. You know, that's what they look. They look for anything and everything to almost stop a deal. But I'm there. We're all there to say, no, you're not stopping this. We're going through it. So we did all the documents up front. I know if I told you you qualify for this, you're qualifying for it. There's no hesitation about it. If something comes up, again, deposits or less overtime, we figure it out. We get as creative as possible within the guidelines to make it work. And if it's possible, I will find a way to make it work. Once we get the contracts in, it goes to the underwriter, they look it over. Commitment, Tamara says it takes we get about 45 days to do it. Once I submit contracts, my turnaround time for a commitment is about 4 or 5 days. I can work as slowly or as quickly as you would like. If the person selling you the home, they already found their place, they live somewhere else, they want you to get in there quick, we're gonna get this thing done in 3 weeks. You'll be in that home in 3 weeks. If that person is waiting to buy their home and they have to wait a month, then we'll take it easy. We'll take it slow, keep stacking your money. Don't start furnishing your house yet because you don't have the keys yet. Don't open the Bob's furniture store. Don't buy that stuff, because if you do that, you can very well risk not having a home to put it in. Don't do any of that stuff until you have the keys in your home. Bank. So Tamara's order. She has the contracts. We put into underwriting. She orders the title report. At that point, you'll get disclosures. It's 1,000,000 pages to sign, to e-sign. It's everything in the world between every law and everything like that. I will break it all down for you, and I will tell you that these are just verbiage for the laws. Read it as you will, but this is what all this means. Is your loan estimate, how much you should expect to pay, etc., when we expect to close. During that time, we're going to order the appraisal. Tomorrow's ordering the title. The appraisal is a third party who I'm not allowed to speak to. I speak to a management company. The management company orders the appraiser. He goes there, he looks at the house. He or she looks at the house and say, this house is worth X amount. Let's say it's exactly what you offered. Perfect. Let's say it's a little less than you offered. Now we can go back to the negotiating table. Hey, we offered you 510, it's worth 500. We want to give you 500. Stella and Tamara will get involved in that. We want to give you a little less. Now, let's say on the other hand, it comes in 550, right? Which is very likely. It's been rare where I've seen an appraisal come in low these days. You have either $40,000 worth of equity built into your home, or you can negotiate some sort of seller's concession where they can pay some of your costs through that equity. Either way, you're ahead of the game because you are you're buying something for $5 that you can sell for $7. You know what I mean? You have equity, you have value in it. There's going to be a clear understanding of the conditions, title issues, and the appraisal conditions. It's at value, above or below, we figure that out. They might come back and say, you need a handrail on the staircase because it's not safe. The homeowners say, all right, we'll put the handrail up. Conditions, that's the underwriter saying, all right, so if your name, let's just say your name is John Smith. We run your name, there's gonna be like 20 pages of John Smiths who have red light tickets, parking tickets, who live in the same neighborhood who's not you. Say, that's a condition, sign up, this was not me. I've never owned this house, I never ran this red light, etc. Little things like that, or we might need a pay stub or a bank statement. Conditions are generally taken care of before I even give it to the underwriter because they know what they're going to expect. But you might have the same name as somebody else. Something very, very small, very silly. We're going to go over the final cost and set the closing date. So in your contract, you'll have in New York State, it's on or about closing date. So let's say that on or about closing date is August 1st. We have anywhere from July 1st to September 1st to close.
No. It's on or about August 1st. It's anywhere between August 1st to September 1st. Not July 1st.
We closed before, no?
So if the contract says on or about August 1st, that means the parties have anywhere between August 1st to September 1st to close. September 1st is the drop dead date. You don't have to wait until September 1st. It just means everybody must be ready by September 1st. On or about is just legal terminology for a 30-day cushion. So if it said on or about 60 days, That means you've got to close anywhere between day 60 to day 90. We don't have to wait until day 90, it just means everybody must be ready by 90th day. That's what on or about means.
And that's why she's the attorney. Going back to that, so we have from there, we have 30 days in the on or about. We want to close when you want to close, when the sellers want to close as soon as we can, but again, we move as fast or as slow as we need to in order to make you guys happy. You guys are our clients. We represent you. The seller's attorney represents the seller. The seller's agent represents the seller. We're your team. We're going against their team. But at the end, we want to make everyone happy. We go to the final costs, which are the closing costs. They could get a little bit expensive. You know, if you have high property taxes, you're usually paying roughly 6 months of property taxes in advance. You're paying your title fees, your title insurance, a year of homeowner's insurance. And this is something for me to just tell you right now, each individual one, you're not gonna remember any of it, but there's a whole bunch of fees aside from your down payment, the one-time fees, which cover every aspect of it. The most minimal are the bank fees. It's underwriting and processing, which is like $1,500. Everything else is your state tax, your county tax, your transfer tax, your deed tax, your title fees, your taxes, your insurance.
Mortgage tax?
Mortgage tax, but that's, yeah, mortgage tax. Tax. You buy something, you're paying tax. You sell something, you're paying tax. But that goes to our government, whether it's local or federal or whatever the case is, state, not federal, state or county, etc. That's who's really making money on both ends of this. So that's what a majority of the closing costs are. The associated costs of buying a home. So the costs out of pocket during the process. So everything's in the mortgage, but the thing that's not included in your closing costs or in your loan estimate are your home inspector. Generally anywhere from $500 to $1,000. On the higher end, it's usually for a multifamily home or a much bigger square footage home. But be expected about $500 to $550. If somebody's you don't know says, yeah, I'll do it for $200, you pay for what you get. You know, you always want to use somebody who's either recommended or you do know a person who's a home inspector. You know, the person I recommend, this car's in there, his name is James. He's been a union contractor for 18 years. He's been a home inspector for like seven-ish years. He has a mold inspection company. This guy, I mean, he's a good friend of mine. I've known him for 30 years. And I wouldn't recommend anyone I don't use myself because my reputation is on the line as well. Feel free to use whoever you want, just know you pay for what you get. So if that person's telling you, yeah, $200, I got you. I'd rather spend a couple more dollars and make sure I got something good. The appraisal, that again is a third party. It's all certified from a certified appraisal, a certified appraiser, depending on the type of loan and the type of home, anywhere from $500 to $1,000. Your typical single family home on a conventional loan will be about $525. If you're in an area with a low population, you know, somewhere way up north and it takes the appraiser an hour and a half to get there, they might charge a little more, but you'll know that fee prior. But figure about $525 to $550 is the real cost. A survey, if needed, a survey is essentially a bird's eye view of your land. Are the fences where they need to be? Is your, you know, are you encroached on another property, are they on yours? It's basically what is your land, this is your exact land. If you would like to do it, do it. The bank does not require it. Some attorneys, some people recommend it. I say it's up to you. If your fence line is all jacked up going this way and that way, yeah, you want to take a look at it. If it seems fair, it's really a decision if you want to do it or not. You know, if you have a large property, you might want to do it to make sure you have all your room. If you're somewhere in Brooklyn where the houses are right next to each other, there's only so much room, you know, in there anyway. You're paying your first year of homeowner's insurance ahead of time. You're always paying ahead. Same with taxes, you're paying ahead. So that is going to be paid to your insurance company. And then every month you're still paying insurance, right? So the following year when your premium is due, that escrow account pays for the next year. So you're still paying it even though you paid the year ahead, but when that year's up, it gets distributed to the insurance company. Your attorney fee is typically somewhere around $1,200 to $2,500, again, depending on the size of the house, depending on the type of deal it is. So in New York, your closing costs are typically 4 to 6% of the purchase price. That is not an exact mathematical number, but expect that. Whenever I give you an estimate, I'm always going to overestimate a little bit. I will never tell you a number and it will come in higher. I will tell you a number and it will come in at that or lower. There will be no surprises. The only surprise would be it'll be less expensive or cheaper, I should say. It will not be more than what I tell you. Options to pay your costs, your own money, seller's concession or seller's credit. If they don't want to fix the electric, you found the inspection, they can say, we'll give you $2,000. Just an example, fix it yourself, we'll take $2,000 off the purchase price. Seller's concession, if the price is really high, they can take some of that money in your equity and help you with your closing costs. Gift funds, like I said, depending on the type of program, there's certain ways to accept the gifts and receive the gifts. So we can go into that, family members, friends, employers, etc. Certain ways to do that. Don't just say, yeah, my buddy's gave me a couple of checks, I put them in. Let's discuss that. Any questions? That pretty much wraps it up. Again, we have Tamara, Joe, Stella, and myself. We're always in communication with each other throughout the entire process. I can't stress enough to getting pre-approved prior to going out there. You want to know what you should be looking for. You want to know what you can afford. You want to know what you can afford on paper, in reality, and what to expect. Don't waste your time looking at a home that you just won't get because either you can't qualify or the payment is just insane. Know what you're prepared for.